Saving money is one of the most important things that we need to do, especially nowadays. But did you know that there are certain methods out there that you can save money, even if you earn less? Yes, you heard me right. In this video, I'll be showing you how you can start saving money, even if you earn less. So make sure you stick around until the end. And without further ado, let's begin. Before we dive into the topic, I would really appreciate it if you could show some love by liking this video. This helps the video rank better and reach more people. And if you haven't already, consider subscribing. Alright, now let's get back to the video. Now the first step on how you can start saving money is to track every expense. By tracking every single expense, you have a clear understanding of where your money is going. Nowadays, there are so many apps out there that you can use to track your expenses. And not only will it help you identify areas where you can cut back, but it will also help you avoid unnecessary spending. For example, if you're planning on buying something, you can check your budget and see if you have enough money to spend on it. You can also set up automatic alerts so that you're notified when your account balance is low. Tracking your expenses is an important first step towards saving money. By understanding where your money is going, you can identify areas where you can cut back and start saving more. The second step on how to start saving money is to prioritize needs over wants. When you're trying to save money, it's important to prioritize your needs over your wants. Needs are things that you need to survive, such as food, clothing, and shelter. Wants are things that you want, but that aren't essential, such as a new car or a vacation. When making decisions about your finances, ask yourself whether you really need something or if you just want it. If you decide that you need it, then buy it. But if you decide that you want it, then wait a while before you buy it. This will help you save money and reach your financial goals. For example, if you're thinking about buying a new TV, ask yourself if you really need it. If you don't watch much TV, then you probably don't need it. In this case, you should focus on your needs rather than your wants. The third step is to set a small savings goal. Setting a savings goal can help you stay motivated and focused on your financial goals. Start with a small amount that you can easily achieve, such as saving $5 or $10 a week. Once you've achieved this goal, you can gradually increase the amount. The important thing is to start small and build up from there. It's also important to be realistic when setting your savings goals. Don't try to save too much money too quickly, as this can be overwhelming and lead to failure. Instead, set achievable goals that you can realistically stick to. For example, if you're currently not saving anything, start with saving $5 a week. Once you've been consistent with this for a few weeks, you can gradually increase the amount. The fourth step is to automate your savings. Automating your savings is a great way to ensure that you're consistently putting money aside for emergencies or other financial goals. It takes the effort out of saving money, making it easier to stick to your budget. To automate your savings, you can set up an automatic transfer from your checking account to your savings account each month. This will ensure that you're consistently putting money aside without having to think about it. You can also use a variety of online tools and apps to help you automate your savings. Many of these tools allow you to connect your bank accounts and automatically transfer money from your checking account to your savings account each month. You can also set up alerts to notify you when your savings account is low, so you can make adjustments as needed. Automating your savings is a great way to make saving money easier and more consistent. By taking the effort out of saving money, you can free up time and mental energy to focus on other aspects of your financial well-being. The fifth step is to cut unnecessary subscriptions. Cutting down on unnecessary subscriptions is a great way to reduce your expenses and free up more of your budget for savings. Take a look at your bank statements and credit card bills and identify any recurring payments that you don't use or need. Or, for example, if you have a gym membership that you don't use anymore, cancel it. Or if you have a subscription to a streaming service that you don't watch often, downgrade it to a cheaper plan or cancel it altogether. You can also use this opportunity to negotiate lower rates with your service providers. Call your internet, cable, and phone companies and ask for a lower rate. In many cases, they will be willing to offer you a discount to keep you as a customer. By cutting down on unnecessary subscriptions and negotiating lower rates with service providers, you can free up more of your budget for savings. The 6th step is to cook at home. Cooking at home is a great way to save money and improve your health. Eating out can be expensive and unhealthy, so cooking at home is a great way to save money without sacrificing flavor. To start cooking at home, you'll need to invest in some basic kitchen supplies. This includes pots and pans, a blender, a food processor, measuring cups and spoons, and basic spices and herbs. Once you have the supplies you need, you can start experimenting in the kitchen. There are countless recipes available online and in cookbooks that you can use to create delicious meals at home. You can also get creative and experiment with different flavors and ingredients. If you're new to cooking, start with simple recipes and gradually work your way up to more complex dishes. With a little practice, you'll be able to cook delicious meals at home and save money at the same time. The 7th step is to use cash or budgeting apps. Using cash or budgeting apps is a great way to keep track of your spending and save money. When you pay with cash, you're more likely to stick to your budget as you can physically see how much money you're spending. Budgeting apps also help you track your spending and categorize it so you can easily see where your money is going. They also often have features such as spending limits and alerts that can help you stay on track. Additionally, some apps offer rewards for staying within your budget, which can help keep you motivated. No matter which method you choose, using cash or budgeting apps is a great way to save money and stay on top of your finances. The 8th step is to buy smart, not cheap. When it comes to saving money, it's important to remember that buying smart is often better than buying cheap. While it may be tempting to go for the cheapest option, it's important to consider the long-term cost and value of a product. For example, if you're looking for a new TV, it may be tempting to buy the cheapest model available. However, that TV may not last as long or provide the same picture quality as a more expensive model. In the long run, you may end up spending more money on replacing the cheap TV sooner than if you had bought a more expensive model that was better quality. When making purchasing decisions, it's important to weigh the pros and cons of each option and consider the long-term cost and value. Buying smart can ultimately save you money and provide you with products that are more reliable and of higher quality. The 9th step is to avoid impulse purchases. Impulse purchases are often the result of strong emotions, such as excitement, stress, or boredom. To avoid making impulse purchases, it's important to take a step back and assess your emotions before making a purchase decision. Ask yourself why you want to make the purchase, and if it's something you really need or just a momentary distraction from your problems. If it's an impulse purchase, then it's best to wait 24 hours before making the purchase. This will give you time to cool off and make a more rational decision. It's also important to avoid shopping when you're stressed or bored. If you're feeling overwhelmed, it's easy to turn to retail therapy as a way to cope. However, this can lead to impulse purchases that you'll later regret. Find other ways to manage stress, such as exercise or meditation, and find alternative ways to entertain yourself, such as reading or spending time in nature. By taking these steps, you can avoid making impulse purchases and save money. The 10th step is to increase your income gradually. Increasing your income is a great way to save more money and achieve your financial goals. While it may seem like a daunting task, there are some simple steps you can take to gradually increase your income. One way to increase your income is by looking for a part-time job or freelance work in your area of expertise. This can be a great way to earn extra money without committing to a full-time position. You can also look for opportunities to negotiate a higher salary at your current job. If you feel that you're underpaid, it may be time to have a conversation with your boss and ask for a raise. You can also look for ways to monetize your hobbies and interests. If you have a passion for something, it may be possible to turn that passion into a profitable venture. For example, if you love writing, you could start a blog or offer your services as a freelance writer. By following these steps, you can gradually increase your income and save more money. So there you have it. 10 steps on how you can start saving money, even if you earn less. If you're able to follow these steps, you'll be able to save money, even if you don't earn much. Thank you for watching. If you enjoyed the video, please like and share. We'd love to hear your thoughts in the comments below. Don't forget to hit the subscribe button so you don't miss out on future videos. Wishing you all the best on your journey to financial success.